All right, welcome to some chapter 9 examples. I just realized as I zoomed some of the numbers disappeared, but I'll walk through just a couple of examples, and I will also make sure this Excel file gets posted on FOL so you can download it and see where the formulas and see where the numbers come from. Because I find that's the best way to learn cash flows, is to really just follow and trace how the different components are done. So I'll walk you through two examples in this file. So question 10A. Gives us the balance sheet. So this whole left-hand side is provided in the workbook, and that's question 10A on page 338, where we have this company Planet Inc., their balance sheet as of December 31st with the prior comparatives. Total assets of $223,000 this year, matching liabilities and equity with the various details as well. We're also told to assume that the current liabilities include only items from operations, that being accounts payable and taxes payable. That long-term liabilities include items from financing, such as bonds and other. Let's note that the company did not sell any equipment and did not borrow any additional long-term liabilities throughout the year. Okay, so in this case, we want to, just double check my notes here. Yes, just prepare the statement of cash flows for 2020 using the indirect method. And we're assuming no dividends were declared or paid as well. So in this situation, just like every other financial statement, you start with your company name, the statement of cash flows, what period is, and it's for the year ended, December 31st, 2020. And then in the indirect method, we're starting with the net income under operating activities. So it's always broken down into the three categories: operating, investing, and financing. Under operating, we start with net income under indirect method. So therefore, in this case, since there were no dividends paid, the change in retained earnings would be our net income for the year. So the change in retained earnings is $20,000, so our net income is such. And then we would add the various adjustments. So in the first adjustment is typically depreciation, which you can see our accumulated depreciation increased by $9,000, so we need to add that back. Then we need to add the changes in operating assets and liabilities. And the accounts receivable line, it increased $6,000. That reduced the amount of cash available, so you'll see that as a negative. See the increase in prepaid expenses. So again, we've provided more money prepaid to our vendors, therefore we have less cash available to us, so it's a negative 500. And then we have an increase to our inventory of 9,000. So they're all decreases in the amount of cash available. So under the net cash provided or used by operating activities, we would have 13,500 being the sum of those items. Under cash flow from investing, we would simply have the $21,000 additional equipment. Okay, so we didn't sell any, we only bought some, is what our note told us. So for the $21,000 change in capital cost before depreciation, the original cost is a reduction. So it's a $21,000 reduction for investing. And then moving on to financing, we have the $15,000 provided through the issuance of additional common shares, offset with a reduction in our long-term liabilities. So we obviously paid off some, bonds owing, et cetera, 5,000. So the net cash provided through financing activities was a total of 10,000. Our cash at the beginning of the year was 5, with the change in the year being 2,500. So the cash at the end of the year should be 7,500, which if we look at our balance sheet on the left-hand side, they do match. So we will carry on and do one more question together, being question number 14, where we have this company, Breakwater Boats. They provided us their income statement and comparative balance sheet. I've provided a copy in Excel with a change column, so we can easily use those changes to feed the statement of cash flows. We have the income statement here, showing a net income of $90,870. We're also told that during 2020, the land was sold for a gain of $6,000, and that there was no equipment purchased throughout the year. Okay, so you can see equipment stayed the same. The land was sold for a gain, therefore that $6,000 gain is part of our net income on our income statements. Just keep that in mind. So we're asked to do the statement of cash flows two ways, indirect and direct. So first of all, we'll start with the indirect method. broken down to the same three categories: operating, investing, and financing. So under operating, we would start with the net income being $90,870. We would add back depreciation, which is $1,700. Then we need to remove the gain on sale of land because that's not considered an operating activity. So we'd remove the $6,000 from the gain on sale of land, which can both be found on the income statement or in the note here that we're told additional information. And then we go through the various operating assets and liabilities. So we had an increase in accounts receivable of $7,300. So that consumed cash. We had an increase in merchandise inventory of $81,300. So that also consumed the cash. And we increased payables by $6,900. So that actually generates cash. So when you delay payments to vendors, you're keeping the cash longer. Just think about it that way. So our net cash provided by the operating activities was $4,870. So slight positive here. From investing, we're told that the only item that we have was the sale of land, which we had a gain of $6,000, so the $44,000 book value, plus the gain on sale of land means we sold the land for $50,000. So the $50,000 comes into the sale of land, which is the only investing activity we had. And then from a financing activity perspective, we reduced the amount of our notes payable by $8,500. So that's a payment of notes payable. We paid off a liability, therefore it reduces the amount of cash we have on hand. And then our dividends, how we determine that is if you look at our net income, does not equal the change in our retained earnings. And thinking back to prior chapters, our retained earnings is affected by net income and subtracting dividends. So we can do the backwards math. So if you look at my formula here, it takes the net income less the change in retained earnings, tells me that we spent $35,000 on dividends that year, being the difference of 90 and 55. So for the net cash used by financing activities was $43,500 added to the beginning cash of $62,500 equals the closing cash of $73,870. Moving on to the direct method, only really one change is how the operating activities are displayed. So you split out cash receipts versus cash payments. So let me hide indirect method for a second. Oops. Hide. Just to pull it all up on screen. So then we want to split out operating activities between cash receipts and cash payments. Cash receipts, how you get that number is based on our total sales. And then we have to apply the change in the AR, so the timing of how our customers pay. So if our accounts receivable went up in the year by $7,300 and our sales were $562, our cash receipts from customers was the $562 less the amount that they didn't pay us within the year. So there's a difference of 7. So you can follow my formula here. It equals to the sales plus the change in AR. Under cash payments, you look at the cost of goods sold, add any change in inventory because we bought that inventory. So we paid for it. So it's the $365 plus the $81,300 offset with the change in accounts payable because we're told that we're assuming the accounts payable was only for merchandise inventory. That's another assumption we were told. So AP was a merchandise inventory. So it's equal to $365 plus the $81,300 plus the $6,900 equals the payments for merchandise inventory of $439,700. Our operating expenses come right from our income statement. Our income taxes come right from our income statement. There's no income tax was payable, and we've already assumed the AP was all related to inventory. So there's no other balance sheet components for the other cash payments. Total cash payments then in the year were $549,830. So then the net cash provided or used, in this case provided from operating activities, was $8,070. Let me unhide this again. So you'll see that the total in both versions are the same. It's just how it's displayed varies. Investing and financing are the exact same components between indirect and direct. The change in cash is the same, opening cash is the same, and therefore the cash at the end of the year balances in both cases. Again, I hope you find that this template is helpful, and if you have any further questions, please feel free to reach out.